2023 ending, we did a discussion where we discussed about the mid cap and small cap rally, where we advised our viewers to maybe rebalance their portfolio across large cap. But then the current numbers that have come in terms of SIP inflows, and specifically in these two categories, have again gone, have achieved record high levels. How do you look at these numbers?
So, hi Kavita, always a pleasure chatting. So, we are at a very beautiful period when it comes to small and mid caps, right? If you look at the valuations, if you look at the signals, if you look at the opinions of everyone in the industry, everyone is talking about small and mid caps on a very, very cautious note. But the SIP book seems to have a very different story, and this is attributable to a couple of reasons, right? So the SIP book is growing for the first time in the small and mid cap segment, very specifically because of the returns and the performance that the erstwhile SIP investors have already tasted, and this has come after a rather long dry spell, right? So for the longest period in time, small cap, mid cap SIP investors did not see any returns. It is last year that they saw a good spike in returns, and so there are two sets of investors, one who were already invested and the others who were watching from the sidelines. So the ones who were already invested really tasted the returns for the first time, and then they realized that in the longer term, small cap and mid caps generally do tend to in fact outperform large caps, and there could be certain cyclicality involved at a heightened level, but still mid caps and small caps are poised to outperform that. So the ones already invested, I believe they are doubling down on their SIPs, and the ones who were on the sidelines are in fact thinking and are looking at the numbers and thinking that now is a good time to invest from a much more longer term perspective. Considering the entire narrative around how the macro tailwinds are shaping and how generally the sentiments in the markets are upbeat. Now, if you are investing for the longer time, it's okay. Whatever the valuations are now, that is, it's all right. However, there's one small nuanced thing that most people may not be paying attention to, is that although the gross flows in these categories are looking good, and we are seeing the inflows really picking pace, especially in the SIP book, there is also a fair bit of redemptions that are happening. So if you were to juxtapose a few data points and see how the total mobilization is looking at a gross level, how the net mobilization is looking, and you run a correlation with the number of folios increasing at a gross level, there is a tendency, you can sort of make out that there is chunky and bulky redemptions happening, but at the same time there are much more slightly smaller ticket sizes that are entering through the SIP route. So there is a fair sense that probably large investors and institutional investors, or large HNIs are rebalancing and churning their portfolios out of favor of mid and small caps at this point in time. But there is a very robust retail inflow that is supporting the net inflows into the category. And very recently in December, we saw an NFO also in the segment that pushed the mobilization slightly higher, and there's a fair deal of SIP flow that came in through that route also. So these are a few nuances that I thought one should highlight while looking at the flows, and especially SIP flows in the small and mid cap segments.